Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka, proving to be a market day before yesterday. Also, they were net buyers. But let's quickly bring on board then our guest for today. Joining me is Ajit Mishra, who's the Senior VP Research at Religare Broking. Ajit, great to have you on the show as always. Given the fact that global cues are very strong and, we saw the put call ratio also dipping below 1 and, India VIX also was in focus. Do you think we are primed for a short covering rally today? If yes, 25,100, do you think that's very much on cards for today?
Yeah, good morning, Nandita, and thanks for having me. So yes, we are seeing positive signs from the global market, and Nandita, it's been almost like nearly 2 weeks, 3 weeks that we are largely following the global clues. One day we try to negate the pressure from the U.S. market, but eventually we are just tracking or mirroring the US markets. So taking clues from the US market, definitely it is positive. But if you talk about in the domestic setup, I feel that 24,900 is the critical make or break area for the Nifty. So until we decisively sustain above this level, there is a possibility that we are going to see higher levels. But are we going to see a new high? That is still a question, because around 25, 150, we have a strong hurdle. Banking, we are not seeing broader participation yet. So it was ICICI basically, which is leading from the front. And then we have other sectors which were doing well earlier. They have started seeing some, profit taking at the higher end. So I feel that consolidation is likely to continue with the bias on the positive side until we break 24,900. So that should be the area where one should keep a close eye on. And once we close about 25, 150, in that case, if the banking also aligns with the move, then definitely we are eyeing to a new highs in the index. So as of now, if you are a trader looking for trade in the index, please don't chase the initial gap. Let the market stabilize for 15-20 minutes. And if we manage to sustain the gains, then only look for buying position for 150, 200 being the intraday targets.
Okay. Let's talk about the stock that was in focus yesterday. Index stock, Tata Motors tumbled over 5% below that 1,000 mark for the first time since July. And, excuse me, and UBS has, of course, given a sub 900 rupee kind of target on the stock. Stock has been stuck in a downtrend, Ajit. What are the kind of support levels that one should work with? And if one is an intraday trader, what is the kind of strategy one should adopt?
So certainly, because while the other auto counters, if you see, Nanta, they are either trading closer to their record highs or making a new highs. Just Tata Motors is something which is reeling under pressure from almost 2 months now after making a new high in July. Till yesterday, we were okay. Means post this gap down start and decisive negative close, the pattern indicates that there's a possibility of further declines towards 950, 930 area. So if you have an existing position, 950 should be a strict stop, and use any recovery towards 1050, 1030 area to reduce your position, because it is likely to either remain in a range or continue with a negative bias, at least in the short term. So avoid any fresh position. If you have an existing trade, 950 should be a strict stop.
Okay, 950 should be a strict stop loss for Tata Motors, but Route Mobile is one stock that's in focus. There is likely to be a block deal in the counter where one of the promoters, Proximus Opal, plans to sell up to 6% stake. The floor price for the offer for sale has been set at 1635 rupees per share. Of course, it's a 2-day OFS, and OFS for retail investors will open tomorrow. But Route Mobile, looking at the stock movement, it has been fairly okay-ish in the last 1 month, although a 3-month journey has been a little choppy to capture the movement. But it is still quite some time away from its 52-week highs of 1950 or thereabouts. And today, of course, there could be some bit of an overhang, given the fact that there will be an OFS, there will be a lot of supply, in terms of shares. So, what is the level one should be watching out for here, on the downside? Is there any strict stop loss that one should exercise here as well?
So, Nanda, as you rightly mentioned that if you see that 2, 3, months of move, it's been very erratic. And but the good part is that the stock has formed a very strong base around 1500 mark. So, in multiple occasions, the stock, retraced lower, but on the closing basis, it could manage to hold this on the weekly basis. So, if somebody is holding any long trade at present, 1550 should be their strict stop from the trading point of view, because below that, again, it might trade like Leicester or remain in a sideways to bearish bias, at least for the short term. And on the higher side, in case if it manages to hold this 1600 mark, then we can eventually see the stock inching towards 1730, 1750 area. So around that area also one should look to book profits, because broadly it is likely to remain in a range is what the indications are.
Okay, that's the view. It could remain in a range really, but shifting focus to the Adani group of stocks, Adani Ports, that will be in focus. The company will be developing a multi-purpose berth at Gujarat's Kandla port, and of course, it is expected to be commissioned in FY27. Looking at the stock movement, it is still not recovered. The kind of knee-jerk reaction the stock had seen along with other Adani Group stocks on the 3rd of June, if you look at the returns since then, it has been fairly negative, 10% down. But within the Adani Group of shares, whenever I speak to analysts, they are the most bullish on Adani Ports. So, given the fact that the stock is has come off from its highs, do you think this movement downwards could be utilized to take positions in the stock?
So yes, in fact, we have seen decent retracement, but comparatively, we are still seeing the stock is trying to hold the major averages, the short-term averages and the medium-term averages also on every occasion. Currently, we are hovering around 100 EMA, so it's a critical area to look out for. So 1420, if somebody is looking for a trading position, at least from the short-term point of view, like less for a month, then this becomes a critical area to watch out for. 1420, in case if it fails to hold, then this profit taking may extend further, and we might get better levels to enter closer to around like 1350, 1340 area. So as of now, I would recommend to avoid any fresh position. Let it break 1470 on the higher side or a dip towards 1350, not in between.
Okay, that's the view, but just about 18 or 15 odd seconds to go for the markets to open. We are looking at a fairly strong start above that 25,000 mark. In fact, a triple digit move cannot be ruled out on the Nifty. A lot of sectors will be in focus and a lot of stocks will be in focus. Of course, Tata Steel will be one, given the fact that it has come to a deal with the UK government over its Port Talbot plant. And, negotiations were on for quite some time. That stock will be reacting, but the Nifty, of course, has opened a gap up with a 130-point gap up, rather 25,050 on your screen. Sensex as well up 300 points. The mid-cap index is fairly strong, 1% higher for the mid-cap index. The Bank Nifty also starting the day on a positive note. Let's take a look at some of the other sectors then and see what they are doing. Most of them should be in the green. In fact, yes, all of the sectoral indices are in the green, and leading the sectoral movers is the metal pack, 1.5% higher for the metal pack. I'm pretty much sure that it would be led by Tata Steel. Yes, Tata Steel is the top Nifty gainer, 2.5%, almost 3% gains coming in on Tata Steel. Even Hindalco is a close second, 2% gains coming in there. JSW Steel, 1.5% higher. So all of these metal counters are buzzing, and that's clearly reflecting on the metal pack. If you look at some of the other sectoral movers, autos are doing fairly okay after yesterday's fall. 0.3% higher for the Nifty Auto Index. Energy is also upbeat, 0.7% gains. IT pack is doing well, of course. Lead over 2% from the day, and that was, of course, led by technology shares, which is also focused 1% higher for the Nifty IT index. Even PSU banking index, mind you, PSUs have been in a spot of bother. The PSU bank index has seen days of sell-off, and today it has staged some bit of a rebound, 1.5% higher for the Nifty PSU bank index as well. In terms of individual movers then, aside of metals, what's doing well is Shriram Finance, Bharti Airtel, BPCL, after giving up gains yesterday, has managed to stage a rebound. Adani Ports is doing well. SBI as well has managed to reverse its string of losses. 780 on SBI right now. Bajaj Auto, mind you, yesterday saw heavy volumes and hit a new high, and today as well continues its ride upwards. What's not doing well, are the likes of Nestle, M&M, Asian Paints, that was among the top gainers yesterday. ITC as well, not doing. Some of the FMCG names are under pressure. Nestle, ITC, HUL, all of these are under pressure. Some of the private banking names like ICICI Bank also under pressure. But Tata Motors extends losses, 0.3% lower on Tata Motors. But looking at the open, Ajit, what would you be recommending for our viewers this morning in terms of trading picks?
So, Nanda, one sector which has stand out in this recent dip is FMCG, and where we are seeing consistency in the trend also, despite the recent volatility. And among the names, Britannia is something that we like at current levels, considering the stock is trading at the record highs post consolidation range breakout. And we expect this momentum to continue further. So 6180 is what we are eyeing in Britannia in the near future. So with stop at 5940, one can look for fresh buying even at current levels. Apart from that, IT also, I feel, especially the IT majors, showing resilience, and this recent dip should be considered as a buying opportunity. So Infosys is another stock that we like, during this corrective phase. And 1890 is something that one should maintain as a stop loss, with the newer high being the target area close to around 1970.
Okay, that's the view then. The IT and FMCG, those two pockets looking good. But I want to ask you about one particular stock, BEL, Bharat Electronics. We have a query also on this stock. It has recently bagged a large auto in excess of 1100 crore rupees. Today as well, the stock is up 1.5% or thereabouts. It's still, some 50 odd rupees away from its 52-week highs. But of course, we've seen defense stocks, seeing intermittent sell-off, and some of the PSU names, of course, have come off quite a bit from their record levels, right? So, any particular strategy with respect to defense names, especially BEL now?
So, in fact, Nanta, if you have noticed that entire PSU pack has been underperforming, and the defense is no different. Comparatively, yes, they have done pretty well of late, with witnessing some rebound or respite, while others are still dealing in the pressure. For BEL, it's a very tight range that the stock has been now hovering in, and we are closer to the upper band of this range. So close to around 294.95, we have the strong hurdle for BEL. So if you have any existing position, I would recommend to reduce that position at current levels and let it break 295 to re-enter, or wait for an entry toward 280 for fresh position. Because considering that the overall PSU index, I doubt that we're going to see any meaningful recovery, at least in the near future.
Okay, that's the view on BEL. In fact, I had a couple of queries on this stock from Yash, Kamath and Altaf Hussain. Hope this answers your query. But let's shift focus on NBCC India. Shares are up almost 2% today, but there is news flow. The company is collaborating with MTNL to develop 13.8 acres of land parcel in New Delhi. Now, this project is valued at somewhere around 1600 crore rupees. The stock has been fairly choppy. The moves have been fairly choppy in the last 5 sessions. Even the last 1 month hasn't been all that great. 179 is where it's at. If somebody wants to short this stock, would you advise?
So it's hovering in a very tight range at the record high. So we need to wait, where this, consolidation finally ends. So the upper band is close to around 185.88, and the lower band around 173. So as of now, bias is still in the favor of bulls. So the bias is still in the favor of bulls, and one can stay put until we break 173 mark.
Okay, stay put in an NBCC India. But Electra Green Tech, this stock is in focus, up 4% as we speak. Of course, there is a trigger. The PM e-bus scheme aims to have 38,000 e-buses in 169 cities, and they have set aside some around 4,400 crore rupees for procurement of 14,028 buses. Of course, Electra Green Tech stands to benefit. The stock is fairly active. In the last 1 month, the stock is up 9%. Although 6-month returns haven't been all that great. So do you think this is the start of a new leg of up move? And on the charts, do you see more or higher levels? Because it's under that 2,000 mark now. Could this be the start of a new leg of uptrend?
Yes, Nandita, so it's been almost nearly 7 months of consolidation in the stock after making a new high around 2220 levels, and it has retraced, towards the major support area, though it penetrated the same as well for quite some time. But again, now we have started seeing some buying traction coming in with volumes. So this definitely looks a good candidate to accumulate, and since the risk reward is in the favor, 1600, that should be your closing stop for this stock to accumulate. And upside, gradually one can wait for 1860 to 1920 levels.
Okay, that's the view on Electra. But one stock that has been buzzing and how has been Prism Johnson. Obviously, today it is under some bit of selling pressure. But in the last 2 sessions, it has rallied in excess of 25%. How should one approach this stock now after the kind of up move that it has seen?
Yeah, so it's been a very strong move. As a disclosure that we have recommended to our clients also around 180 area with, if I'm not wrong, 210 being the target zone. So it surpassed that level also decisively and made a new high around 246. Now we are seeing a bit of a profit taking. So it's normal to see some consolidation up 25% kind of a move. So for fresh buying, one should wait now because the stock has done its, recent up leg now, and 216, 230, that could be the broader range that it might hover in. So if somebody is looking for fresh longs, one should wait and let it consolidate with a dip towards 216 being the buying pivot, with 204 as a stop, and then 245, 250 being the positional target area.
Okay, that's the view on Prism Johnson then. But let's now shift focus to some of the queries that are trickling in this morning. Shatabdi Ghosh has a query on BEL. Shatabdi, maybe you can go back in the feed and check what Ajit had to say about this stock. We've already spoken about it. But let's start with Srivardhan Gupta's query then. He has a query on Hemisphere Properties. 2,000 shares he holds at the rate of 180 rupees. I think he wants to know your views over the next 2 to 3 years. The stock has been, in a downtrend. If you look at the weekly and monthly charts, what should his strategy be for the next 2 to 3 years? How should he really approach? Should he average?
Since his buying price is at 180 and he has witnessed an up move toward 260 also in the past. We are again seeing a base formation, and in fact it is not restricted to Hemisphere, means the entire realty basket. We are largely seeing this kind of consolidation continuing. So once we break 205 level, then again the stock might witness fresh traction, and which could help the stock to inch toward 235 to 40 area. So if you wish to add to your position, you can, with 180 being the closing stop for this investment, and around 230 to 40 you can partially reduce that position, because in past also we have seen multiple occasions the stock attempting to break that area, but on the closing basis it usually fails. So around that area you can partially book profit at least.
Okay, partial profits. You can book partial profits. That's the view on Hemisphere Properties. Hope that answers your query. The next query is on a recent listing. I'm just trying my luck here, Ajit. I know you don't have much data. Satya CK wants to know if DOMS Industries has the potential to reach 3,000 anytime soon. It had a very good listing. In the last 1 month as well, it has amassed strong gains of 13%. 2,750 is where it's at. But given the limited data that you have, could you still say that 3,000 could be a possibility?
So yes, considering the steady uptrend that the stock has been maintaining, despite the overall volatility in the mid cap and small cap space, I feel one should stay put. In fact, one can look for fresh long also if you are disciplined and can maintain a strict stop at 2600 levels or 3000 being the target area.
Okay, okay. Thanks a lot for addressing that query. But let's switch to another query then. This one is coming in from Kartikeya Singh. He wants to know your thoughts on Newland Labs. Should one average at current levels post the recent run up? That's his query. Stock has been sideways in the last 5 sessions.
So Newland Lab, it's been exceptional move in last 4-5 months from 6,000 to 12,000 almost. It has doubled. So I feel that adding to the record highs basis the change in the fundamental, then it makes sense. Otherwise, if you are planning for a short term trade, then it's not a good idea to adding more to your position if you have bought it at the lower levels. In fact, now 12,000 should be your strict stop if view is short term. Because in case if it breaks, then there's a possibility that the stock might undergo into consolidation or some profit taking, serious profit taking.
Okay, that's the advice coming in on Newland Labs. Hope that answers your query. The next query is coming in from Anune. He wants to know your thoughts on alkyl amines. This chemical stock has done well, in the last 1 month. It has given double-digit returns. Chemical stocks at one point in time weren't doing all that well because if you look at the YTD charts, they are still down quite a bit. For alkyl amines, it's down 15 to 16% or thereabouts on a YTD basis. But do you think that uptrend that the stock has seen over the 1 month is sustainable, and should one take positions here?
So alkyl amine, Nanta has been trading in a downtrend since July 2021, and it's been a long period of correction. And after forming a base in last 5-6 months, we are seeing this recovery now. So definitely, it's a good candidate to look at, but the challenging part is that the volumes are usually low in this stock. So if somebody is looking for a very short-term perspective, they might experience volatile swing in the stock. So the stop losses are deeper. So at current levels, 2150, that's the stop we have for this stock. And but the targets are equally higher, means we have the next hurdle around 2650. So the risk reward is favorable. If you are okay with that, definitely you can go ahead and add or stay putting in the existing position.
Okay, or add or stay put. That's the call here, Anunay. Hope that answers your query. Just got a query on LIC. This one's coming from Divyanshi. Wants to know whether it should be sold or held on to. LIC, I mean, fundamentally, there are reasons to believe that private players are doing much better than public sector insurance companies, even in terms of market share and growth. Even chartically, if you look at some of the stocks like HDFC Life, SBI Life, we see bouts of good gains on those stocks, right? But for LIC, particularly in the last 1 month, we've seen the stock has not been doing all that well. So would you recommend a sell on LIC now, or would you say that, just look at averaging or buying now?
Nanda, we had this attempt of breakout from consolidation range in July, which failed, and the stock again, retraced towards the major support zone around 1000 area. So again, we are seeing a very lackluster move. From the short-term point of view, definitely I would prefer any day SBI, ICICI, or SDFC Life among the insurance basket. And if you have a long-term view, then definitely you can maintain your longs until we break 950 level decisively. Because after this consolidation, let's say if it again reclaims 1100 mark, it might again make an attempt of breakout above 1200 mark, so which could trigger the next leg of the up move in the stock. So from the very short-term point of view, I'm not seeing any action coming in, at least in the near future. But from the long-term point of view, you can definitely stay put.
Okay, that's the view on LIC. Hope that answers your query, Divyanshi. But lots of queries coming in. I would like to request our viewers to just send your queries once or twice and not more than that. There's a query on BHEL coming in from Yogesh Mahajan. The stock per se has been stuck in a consolidation, right, in the last 1 month. But after the correction, do you think the risk reward is looking much more favorable now for a BHEL in particular? Because it's, around that 260 mark right now. Is this a good time to buy?
So, like Nanda, we were sharing about the PSU pack overall trading under pressure, and we are seeing a similar trend in BHEL as well. So now the stock post the consolidation breakdown has retraced closer to the long-term averages. So yes, we have support around 250 area, and which might trigger some recovery also. But I doubt that the risk reward is in the favor of aggressive longs. So if you have an existing position, you can maintain your longs with 250 being the stop and 280, 85 being the immediate target. But don't expect much, at least from the PSU pack in the near future.
Okay, don't expect much from the PSU pack in the near future. Last query for the day then, Ajit. This one is coming in from Kopal Rastogi. He wants to know your thoughts on Raymond. The stock has been sideways in the last 1 month. 1865 is where it's at. If somebody is looking at this particular stock, should one make that decision to buy it? And if somebody holds it, how should they approach?
So Nanda, I'm seeing consolidation, and on the longer time frame, if I see, then it seems like a distribution to me, which will have a confirmation once we break 1800 mark. So that should be your strict stop if you have any existing position. And upside, I feel that on every uptick close to around 1950, 2000 area, the first hurdle, and then around 2100 mark. So in every 50 points uptick, the stock might witness some pressure. So buying big no, but from the existing position, you can stay put with 1800 being the closing stop.
Okay, that's the view. Stop loss of somewhere around 1800. Hope that answers your query. But with that, Ajit, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. I always look forward to interacting with you and hope to do that soon, sometime next week as well.
Certainly. Nanda will catch up.
Thank you.